Hi, I'm Tony Edward. I'm the author of the book Rethinking Crypto and the host of the Thinking Crypto podcast. And you are watching Taking Stock.
Two minutes to go on this Trading Friday. Here to wrap up another week on Wall Street. The major market indexes are trending for a negative close. This will be the first day in 8 consecutive sessions. The S&P 500 will not finish in positive territory. A bit of a defensive late cycle risk off tape here on Wall Street. Materials, tech, and utilities, those are your strongest performing sectors in the S&P 500, though equal weight tech, a little bit of an underperformer relative to the broader SPY. Financial, staples, and healthcare are your sector laggards. And welcome to the broadcast on this Friday, April 10th. You're watching Taking Stock. I'm your host, JD Durkin. Mere moments away from the ringing of the closing bell, but today not here at the New York Stock Exchange. We'll soon send things 3,000 miles away to the great city of San Francisco for a rare remote closing bell. The Magnificent Seven tech stocks in mixed territory as we head into the final closing auction of the week. Nvidia shares up about 2.5%. Microsoft continues to struggle, trading now down towards the bottom of its 52-week range. Financials mostly down on the day as investors are preparing for a highly anticipated slate of bank earnings set to hit the tape next week, led by Goldman Sachs on Monday. We now toss things out to celebrate the 50th anniversary of NYSE ARCA options trading. Out to San Francisco for the remote bell we go. And there you have it, in celebration of the 50th anniversary of NYSE ARCA options trading. The second remote closing bell this week alone, both out there in the great city of San Francisco. As for here on Wall Street, your final tail of the tape on this Friday, April 10th. The S&P 500 in negative territory, 0.1%. The Dow 30 components down about 0.6. The NYSE Composite Index in the red, 0.4%. With the small caps, the Russell 2000 down 0.2. The airlines, the home builders, most of the major retail players all down on the day. And of course, we got to talk software stock disruption. And once again, the so-called SaaS-pocalypse front and center for investors amid concerns over AI model disruption. Snowflake down 20% in 2 days. Cloudflare shares down 25% in 3 days. And Salesforce continues to be the hardest hit name in the Dow. Let's bring in Max Gochman. He is Deputy Chief Investment Officer at Franklin Templeton. Nice to see you again. Come on this way and join me over here. How are things? And thanks for joining us today.
Yeah, of course. Glad to be back.
Bro, you are rocking this tie handkerchief combo. Awesome for a Friday. Okay, so this is the first day in 8 days, the S&P 500 not in positive territory. It doesn't feel as if the markets have had that type of momentum. What did you see across the tape today after a pretty wild week for trading?
Well, I think we're seeing what we should actually rationally expect is we got negotiations kicking off in Pakistan, in Islamabad on Saturday. We've got a slate of financials earnings coming out on Monday. So we saw risk really taking a bit of a backseat, and I think that makes a lot of sense. There's not a lot of things that have often made sense in this market. Today was actually very rational.
Yeah, a bit more of a defensive risk-off trade, like we said. I want to get your take on the CPI figures because this is the first big inflation print we've gotten to reflect pricing pressures since the start of the conflict in Iran. March CPI, 3.3% top line. That's a big jump. Core CPI, you removed the volatile elements of food and energy, a bit more modest. Was that your expectation to see such a severe jump on the energy side?
Absolutely, and I think the headline number really tells the story there, right, is that we have that effect of the closure of the strait, right, and we should expect to see that. Now, this is going to flow through to the core figures as well. There is a knock-on effect. We should expect that if oil stays around $100 or more, that's going to be anywhere from 50 to 100 basis points of added inflation. So that is going to be something that the Fed needs to contend with, that investors need to contend with, and we are, as you said, just starting to see that but only in the headline number.
Yeah, you also mentioned bank earnings, which we talked about a little bit at the top of the broadcast. We got Goldman Sachs on Monday. We love kicking off earnings season with a look at the big financial players. They really tell us about the health of the consumer under the hood. What are you going to be looking for as the banks kick us off Monday and Tuesday?
Well, I'm not going to be too surprised to see that more volatility means more trading revenue, so I think they're going to do well on that. What I'm really looking for, especially from the bigger commercial banks like JP, is how is the lowest end of the consumer doing? Are we seeing continued rising delinquencies in credit cards? Are we seeing more rising delinquencies in mortgages? There's a real danger that demand destruction could portend to both higher inflation as we see from oil, but also slower growth. If that happens, you kind of bring out the big S word, which is stagflation. So that the signs of stagflation can come through the lowest end of the consumer. That's what I'm watching.
Yeah, we've heard Jerome Powell recently say, don't be as concerned with stagflation. He says what we lived through back in the 70s and 80s, that was real stagflation. But regardless, those conversations will certainly continue. I want to get your take on the crypto majors, how they have been performing, largely range-bound here, Max, since the start of February. Any big crypto catalysts to pay attention to?
Well, look, I think what's been really interesting is the volatility of crypto has actually been pretty muted relative to gold, global equities, global commodities, of course. That is a whole new paradigm for what we would typically say is by far the most volatile asset class. A lot of that is also because we've seen this massive deleveraging from the DATs coming out after premium, from hyper-liquid cutting risk back in October of last year. So now we had this major move with the SEC and the CFTC coming out of a common framework for digital assets. So I think we're going to see more and more a institutionalization of the market, and I think that is really not like a single catalytic moment, but it's going to be a continuation of that momentum.
Sure.
That should lower the volatility of crypto, and that should be really good for making it much more of a proven asset class that investors can access.
Max Gochman, thanks for kicking us off here on the broadcast, the Deputy Chief Investment Officer at Franklin Templeton. Thanks for being here, man. Nice to see you again.
Good to see
Ashley
you.
Mastronardi, my colleague here from the New York Stock Exchange, is live in the city of San Francisco. She is standing by with our next interview. Hey, Ashley.
JD, we are celebrating 50 years of ARCA options trading in San Francisco. Joining me now is Mike West. He is the head of operations for the New York Stock Exchange. Mike, you just rang the closing bell with the mayor of San Francisco to celebrate. How are you feeling?
I feel great. This is such an iconic day, such a happy day for us, a real great celebration. We have a great team out here. Having the mayor was something we talked about early, and it came through, and it was really just, it made the day. It really did.
Take us back to 1976. This was the fourth options trading exchange in the United States. What is the significance of that?
Options was so different back in 76. Everything was floor-based. Everything was done manually. We're now electronic everywhere. There were 18 options exchanges. We were the fourth in 1976. The fifth came in 24 years later. And as I said, now we have 18. So the options industry has evolved so much in those 50 years.
And you're the largest multi-listed options exchange. What do you think has driven that success for the New York Stock Exchange?
Well, certainly for the New York Stock Exchange, our technology and our community and our members are what has driven that volume. We're very proud of the fact that we operate two exchanges, the American Options Exchange and the ARCA Options Exchange. They both have floors, they both have a large electronic presence, and it's a point of pride for us.
And options trading has been booming lately. What do you think is behind the success?
Retail has really embraced options trading in the last 5 or 6 years. We're setting records constantly, both in volume and number of messages we process. That success for us in particular has been our relationship with our customers, our customer service, and the models that we have in place.
And you've mentioned that this is hybrid trading. It's electronic and there are humans trading. What is the significance or the importance of having a hybrid model?
So the hybrid model really plays to all kinds of investors, whether you're an institution that wants to do a large block of options trades or a retail customer that wants to do a smaller one. You know, retail orders are going to be handled electronically typically, but the institutional orders are going to need a little more of a white glove treatment, and those are going to be handled on the floor.
As you celebrate today, what excites you about the future of this options trading floor?
The fact that we've celebrated 50 years and there's no reason to think we're not going to celebrate another 50 years. Options is a wonderful investment opportunity for institutions and retail customers, and it's a great business for us. That's what excites me about it.
What makes trading options unique?
Trading options is unique because it is a derivative of the equity. So it's one step removed from stock trading, and it allows you to use your portfolio to generate income, and it allows you to have some insurance in your portfolio. So there's a lot of protection involved with it, and it's a great asset for that reason.
And we are here on the options floor on Kearney Street in downtown San Francisco, but I understand the options floor has moved around since 1976. Where has it been in San Francisco, and what is the significance of this spot?
So we moved to this spot just in the last 5 or 6 years. We were over on Mills Street, which was a building that we had actually built out for us, and it was an older building which we had put a lot of infrastructure into, but it was just time to refresh. Prior to that, we were in the Pacific Stock Exchange building here, which is a beautiful building with a beautiful facade down here in downtown San Francisco.
And you mentioned the next 50 years of ARCA options trading. What do you see on the horizon?
Nothing but good stuff. I see as more and more people invest, as more and more people are trying to generate wealth in their portfolio, as more and more institutions are looking for insurance, options they're an asset. There's no question that they are an asset class that is here to stay.
Why do you think they're here to stay?
Because people need them. They just provide such great opportunities.
All right, Mike West, head of operations at the New York Stock Exchange. Thank you so much for joining us. We are going to go to a break. JD Durkin will have more on the other side.
Welcome back to the show. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence as you head into your weekend. First up, the crypto majors in positive territory. Bitcoin currently holding on to 73,250. Next up, the Trump White House warning staff not to place bets on prediction markets like Polymarket as well as Kalshi amid scrutiny over trades that lined up closely with major military developments in the war with Iran. And finally, the Federal Reserve Chair Jerome Powell and Treasury Secretary Scott Bessent calling an urgent meeting with Wall Street leaders. They are warning that Anthropic's new Mythos model could heighten cyber risk across the broader financial system. The New York Stock Exchange's very own Kristen Schuller recently spoke with Senator Mike Rounds, a Republican from the state of South Dakota. They spoke at the Hill and Valley Forum down in Washington, all about how AI can help the U.S. scale its own cyber power. Take a look.
We're here at the Hill and Valley Forum in Washington, D.C., and I'm pleased to be joined by Senator Mike Rounds of South Dakota. Senator, welcome.
Thank you very much. Appreciate the opportunity just to visit for a while.
Yeah, of course. And We're going to see you on stage at this forum. What is important to you to take away from today?
Number one, AI is here to stay. And the question is how do we continue to develop it while at the same time assuring the American public that there are guidelines that will be put in place to protect their privacy, and that this is the only place in the world where literally we care not just about the development, but also the privacy as well. So we want to bring the folks that are actually developing it and bring them in with policymakers and talk about that connection between the two. We have lots of things that we're concerned with here in our policy, particularly with the defense of our country and so forth, and the integration of AI into a lot of our systems. But it's not just the defense of our country, it's also for the improvement in the quality of life for Americans overall. And AI can play a huge part of it, but technology in general has got to be something that when the valley comes to the hill, they also share what works and what does not with policymakers. That's what this is all about.
How optimistic are you that the Hill and the Valley can work together on this?
We don't have a choice. We have to work together. And I think the fact that this has been a successful conference of people coming in and actually finding out that policymakers want to do the right thing for the people in this country. And the folks coming in from the Valley are saying, look, we've got great ideas, but how do we implement them? How do we coordinate it? How do we make sure that our ideas are at least heard and that our concerns are heard as well? That cooperative spirit is something that I think some people for a number of years didn't see happening between policymakers and tech developers. We want to change that.
Your panel that you'll be speaking at on stage is titled Scaling Cyber Power. How do we do that?
Well, first of all, we've got real capabilities in the cyber world today. It's the newest technologies. It's incorporating artificial intelligence into our capabilities in the cyber world. How do we protect our systems from those that want to get in? But also, how do we utilize AI and our offensive cyber capabilities to send a message to adversaries who right now are playing with us? They try to get into our systems, not necessarily with any kind of a deterrence on our part that we can always point to. So part of it is defending our systems, both for the people that live here in the United States, but also for our defensive operations as well. The Department of Defense has to protect a lot of things. Along with that, we've got to be able to send a message to the bad guys that we know who they are, we know where they are, and we fully intend to limit their ability to get in and to hurt the people of this country. That offensive capability is one that sometimes we don't talk about, and people wonder whether or not we're providing the deterrence necessary by not talking about it. But I'll go one step farther, and that is the bad guys have lots of people who can develop capabilities. We've got to incorporate artificial intelligence to keep up with people that have simply large numbers of developers.
As a senator on the Hill, what do you need from the Valley community to accomplish this?
First of all, we need them to be here and to share with us what their capabilities are. Second of all, they need to understand that we have a lot of the same goals that they do in terms of privacy protections, but also outside of the United States, we've got real bad actors that are after not just what's in Washington, D.C., but what's in the Valley as well. And so we have a common thread of protection that we've all got to be concerned with. They have lots of things that they want to protect. They have patents, they have copyrights, and so forth. The bad guys really don't care about that, and they want to get in and they'll steal anything they can. How do we work together to make sure that our policies help to protect their intellectual properties as well? Really important to both sides.
Senator Rounds, thank you so much for joining me here at the Andrew Mellon Auditorium, of course, ahead of your panel on stage.
Appreciate it.
Welcome back to the show. Larry Gifford joins us now via Zoom. Larry is president of PD Ventures, the global alliance to end Parkinson's disease. I am very grateful for your time, and let's talk about a big weekend. April 11th, Larry, that's tomorrow. It's World Parkinson's Day. Talk to me first and foremost about what Spark the Night actually is, and what does this moment mean to you?
Sure. Spark the Night is an event where around the world, buildings and bridges and landmarks of all types will light up blue to symbolize the hope and the unity of the Parkinson's community. There's over 12 million people worldwide who have Parkinson's disease. Somebody's diagnosed every 25 seconds.
And it's the fastest growing neurological condition in the world. So it's really important that we get the word out.
Larry, why the color blue? And if you're able to, are you willing to share a little bit about your own personal story and your journey with us here on the broadcast?
Sure, yeah. So blue it symbolizes unity, and it symbolizes the unification of our community. We're so siloed with all the different organizations and everybody wanting different things. This is the one night where we come together and we talk. We show the world what we are, and we're just blue sparkles in the sky. And my journey started in 2017, at the age of 45. I had a bad walk. I thought I twisted my ankle or something, and just blew it off. And then my hand started to tremor, and I went to this doctor, and they said, "Yeah, looks like Parkinson's disease." And I was like, "What? It's crazy." And since then, I've had deep brain stimulation, where they put electrodes in my head to monitor my tremors and whatnot. And it's been a lifesaver. And that's the kind of research we need to continue.
Parkinson's is the fastest growing neurological disease. How many countries and buildings are expected to participate in this weekend's event?
Well, they're coming in fast and furious. Right now, we have over 200 cities involved in 20 countries. We have, I think we're about 675 buildings or bridges or sites around the world that are going to light up. And it's really, it's an exciting time. This is my Super Bowl. So.
Talk to me a bit about what you most hope this campaign accomplishes for the community.
Well, if nothing else, I hope it gets people who aren't familiar with Parkinson's asking questions. Why are things turned blue? What's Parkinson's all about? I thought that was an old man's disease. Ask those questions, because the only way we're going to bust through and really get the help we need and continue to get the great research done and is to be advocates for ourselves. And we've seen it happen before, and we'll do it again, where a disease community comes together and really makes their voices loud.
Larry, where can people go if they want to learn more or to get involved?
sparkthenight.org or pdavengers.com.
All right, we've got our blue lights here in anticipation of this amazing event. Larry, my best to you for your so-called big Super Bowl weekend. Really grateful for your time. Please come back and see us here on the show. All of the best for the weekend, Larry. Thank you.
Thanks. And the NASDAQ, or the stock exchange, will light up this weekend as well. So be on the lookout.
We'll be on the lookout here in Financial District. Larry, thanks a lot. Enjoy the weekend. Folks, don't go anywhere. A lot more Taking Stock coming up live from the big board right after this. Welcome back to the show. Time now for the latest headlines in the world of startups, raises, and rounds you need for your Friday afternoon. First up, Starlink partnering with U.S. Mobile to offer discounted internet and wireless bundles. It's a push to boost subscriber growth ahead of SpaceX's widely anticipated IPO. Next up at this hour, Collide Capital closing a $95 million fund to back early-stage startups that are focused on fintech, supply chains, and the future of work itself. And finally, as you head into your weekend, Portal Space Systems raising $50 million to develop solar-powered propulsion. It's a technology that could transform the way spacecraft navigate in orbit. And now, Money 2020's very own Scarlett Sieber is back to explain all of the ways that fintech companies actually make money. Take a look.
I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make that money. The series where we stop asking whether something is genius or dangerous and ask the better question, okay, but does this actually turn into a business? Today, Polymarket, the prediction market that crossed over from internet curiosity to institutional seriousness. Polymarket lets users trade on the probability of real-world events, elections, court rulings, economic outcomes, even cultural moments. If there's uncertainty, Polymarket turns it into a market. What's important here is how it works. Polymarket isn't trying to predict the future. It's creating a venue where people express beliefs with money and prices aggregate conviction in real time. So how does Polymarket actually make money? First, trading fees. Every time users buy or sell outcome shares, Polymarket takes a small cut. At scale, participation becomes, let's just say, revenue. Second, market creation and maintenance fees. New markets don't appear out of thin air. They take infrastructure, governance, and settlement. Third, volume-driven economics. The bigger the moment, the more activity, and the more fees compound. And fourth, platform neutrality. Polymarket does not take directional risk. It doesn't care which outcome wins. It monetizes activity, not correctness. This is key. Polymarket makes money whether users are right or wrong. Its incentives are liquidity, participation, and trust, not picking sides. Let's do a momentum check for a second. This is where it gets serious. Polymarket received a massive institutional vote of confidence from Intercontinental Exchange, the parent company of the New York Stock Exchange, where we're sitting right now. ICE committed up to $2 billion in investment, including $1 billion initial investment in 25, followed by an additional $600 million cash investment completed in March 26, bringing ICE's total commitment exposure to roughly $1.6 billion so far. Okay, that matters because ICE doesn't change novelty. They don't chase novelty, do they? It builds, owns, and operates market infrastructure. When the owner of the NYSE writes checks like that, it's not a hobby, it's a thesis. So what's Polymarket's moat? Liquidity and legitimacy. Prediction markets only work when enough people participate and trust the prices. Once a platform becomes a place people look for odds, switching costs appear quietly but powerfully. Polymarket isn't monetizing opinions. It's monetizing collective conviction expressed in real time. And that, my friends, is how Polymarket actually makes money, by turning uncertainty into a tradable signal while staying neutral as everyone else takes a position. If there's a finance term you keep hearing about that you want to read the story on, put it in the comments and it might just make that cut. In the meantime, back over to you.
Next week here on Wall Street, earnings season is officially back. We'll hear from the biggest financial players and big banks here on Wall Street with the latest reports from Goldman Sachs on Monday, JPM, BlackRock, Citi on Tuesday, B of A, and Morgan Stanley on Wednesday. Your final tail of the tape on this Friday, the S&P selling off 0.1%. Thanks for watching today's edition of Taking Stock. Have a good weekend.